Good morning. Good morning, everyone. Thank you very much for joining us on this ASEAN conference. We're very honored to have two of the most senior government officials from the Philippines to join us in a session that hopefully will allow our guests to understand a little bit what the current situation is on the Philippine economy, particularly with the current pandemic, but perhaps more important, looking forward into what we can expect into the next couple of years as the Philippine government undertakes its plans to power the Philippine economy into recovery. This morning, I'm very pleased to introduce our two very important speakers. First, Governor Benjamin E.Diokno, Governor of the Bangko Sentral ng Pilipinas. He is also joined in the conference room by the two deputy governors of the BSP, Deputy Governor Francisco Daquila and Deputy Governor Chua. Our other key speaker is the Secretary of the National Economic Development Authority, or NEDA, which is the main economic planning office of the Philippine government. He's no other than Secretary Karl Chua. Deputy Governor E.Diokno, Secretary Chua, welcome and thank you very much for taking the time to join us in this conference, which we are doing in collaboration with the ASEAN Stock Exchanges. This is a conference that we normally do at the beginning of the year to allow our investor friends, particularly in Southeast Asia, but throughout Asia for that matter, to be able to plan their investments as we start the year. The Philippine economy has been growing very strongly in the first 3 years of the Duterte administration, or rather first 4 years, from 2016 to 2019. We've seen the GDP grow by 6.6% on the average. Sadly, we have been beset by this COVID-19 virus, affecting perhaps the main driver of the Philippine economy, which is domestic consumption. So we have seen the economy plummet, declining by 16.9% in the second quarter compared to the same period the year before, and 11.5% in the third quarter. Expectations have been downgraded. At the beginning of COVID-19, I think we were still looking at maybe an average of a 3% decline in our economy. Today, I'd like to hear from Secretary Chua in particular as to what we can expect for the full year 2020 and going forward. Perhaps I'll start with that question, Secretary Chua. Now that the third quarter, or rather the fourth quarter is over, can you give us a preview of what you might be announcing a few weeks from now when you have the full year economic numbers with regards to our GDP for the year?
Thank you very much, Lito. And good morning and Happy New Year to everyone. Well, the first 3 quarters of 2020, we saw growth at negative 10%. And the reason for that is we have one of the longest, broadest, and deepest quarantine. The Metro Manila area and adjacent regions have been in one of the longest quarantine, which had actually affected both the supply and the demand side. So the supply side, I'm talking about restrictions on industries that are allowed to operate, restrictions on public transport. But we also have this restriction on children and from going out, and family consumption actually comprise up to 50% of our retail sales because of our young population. So all of these are actually affecting the economic projection for 2020. But starting October in the fourth quarter, the cabinet met to agree to further relax the quarantine and to open the economy as safely as we can. So more sectors have been opened, more public transport have been put in place, and in fact, we are seeing that significant change in the last 2 months of the year. So all of these, I think, will add to the expectation that quarter-on-quarter growth from the third to the fourth quarter will be a strong positive. But again, because of the first 3 months where we had negative 10%, The impact will be basically, as we projected in the Development Budget and Coordination Committee, somewhere between -8 and -9. Now, in 2021, we see a reversal of that at growth between 6.5 to 7.5% as we see the recovery continue, as we see the quarantine restrictions relax, and as we begin to see the vaccine coming into the country by the second quarter, and the vulnerable population and the frontliners being vaccinated by the middle of the year.
Oh, thank you, Secretary Karl. That's very comforting that in 2021 you're already expecting recovery. But perhaps if I may play devil's advocate, right? And it's unfortunate that Secretary Carlito Galvez, who was supposed to join us this morning, is unable to, but I'm sure he's attending to some very critical activities as he now heads the anti-COVID-19 task force of the government. I'm just wondering, in your assumptions of a recovery in 2021, Secretary Karl, what is your assumption on vaccination? Where are we exactly with regards to the vaccination program for the government? When do we expect it to start officially? And when do we expect the majority of our population to be vaccinated so we can have, I suppose, a full normalization of economic activity? As you mentioned, a big part of our economy is driven by consumption and retail sales. And for as long as families, and as particularly children, are being kept at home and away from schools and offices, it may be difficult to see a full recovery of our economy. What's our vaccination program looking like at the moment?
Well, unfortunately, Secretary Galvez is not with us. He would be more updated and could give us the better flavor of where we are. But, the GDP assumptions or projections that we have in 2021 hinges on two key assumptions. The first one is that we continue to see a gradual opening of the economy. In fact, one of our key assumptions there is that we cannot go back to more strict quarantines. It's not an option, actually. And I'm glad the cabinet has agreed that the general direction really is to enforce the minimum health standards and to do more localized lockdowns or quarantines if needed. And that is very important because as we went through the second to the third to the fourth quarter, the economy, we realized, is very strong, and we are just preventing it from fully functioning. We have the infrastructure in place, the productive capacity of the economy is in place, the people are in place, the skills are there, but we just prevent it from functioning well. And so that is the first. The gradual opening of the economy further is key. The second assumption that we have in our 2021 projection is that we will begin to see at least the first 20 to 25 million, if I remember correctly, of the most vulnerable population, the frontliners, begin to be vaccinated by the middle of the year. And that, I think, will create a important improvement in confidence. As you know, Lito, the key problem right now that we have is not really the money or the stimulus, it's really confidence of the people in knowing that it is safe to go out, safe to go back to school. And I think all of these will play an important role in building that confidence. And finally, we recently conducted a survey over the Christmas and holiday period. 34,000 responded. And it actually tells us that confidence is one of the key drivers of the economy next year. And as we continue to ensure that the minimum health standards are enforced, the vaccination program is on track, and a significant number of them will begin to be vaccinated in the second half of the year and as we enter 2022. Then all of these, I think, will be very useful in supporting our recovery. We expect the Philippines to reach pre-COVID level by mid-2022.
Okay, thank you very much, Secretary Karl. If I may, and let's hope that indeed we continue to see the relaxation of the quarantine protocols in the Philippines, and that vaccination can start as planned, towards the middle part of this year. If I were to again play devil's advocate, Governor, if I may turn over to you, Governor E.Diokno. Yeah, assuming a worst case where, particularly with this new variant coming from the UK, entering the Philippine shores, which may, heaven forbid, but if it had to require a stricter protocols again on quarantine, community quarantine in the Philippines, and the economy starts weakening again, unlike contrary to what is being expected. Governor, you've thrown in a lot of monetary measures to keep our economy running, with reserve requirements going down, with interest rates going down, and for the first time, I think in our modern history, you've also applied quantitative easing by buying government securities by the BSP. Are there any more tools, Governor, left in our toolbox, so to speak? If the economy were to weaken again?
Thank you, Lito, for that question. As you know, we have deployed some 2 trillion worth of instruments. That's about 10% of GDP. And so you ask, do we still have some tools in our toolkit? Yes, there's still some in our toolkit. And so, but at the moment, we are happy where we have cut the interest rates to 2%, the lowest ever, and the reserve requirement is down to 12%. As you know, Lito, when the pandemic hit us, we were in a position of strength, and so as Carl said, the economy is sound. It's just a matter of confidence, and we in our most recent survey, the BSP survey on consumers and business, they are fairly confident that we'll be picking up in the starting fourth quarter and then going to 2021. And in fact, the most recent Pulse Asia survey also said that 91% of Filipinos are hopeful that 2021 will be much better than 2020. And so with the vaccine come and with our experience in 2020, we learned from the severe effect of a nationwide harsh lockdown. That, as Karl said, that the policy now is that we will be more focused on specific areas should there be a surge in this pandemic. In fact, we're optimistic that, as you know, the Filipinos, we're optimistic that we'll pick up. Second quarter will be much higher quarter of 2021 because we had a deep recession in last year. So base effect, second quarter will be strong, and then there will be a very strong fourth quarter also because of the vent demand for Filipinos. We'll celebrate in the fourth quarter of this year.
Yes. Well, Governor, I hope we're all correct in these expectations. But I suppose a really strong recovery will also require a very strong banking industry. Now, obviously, many are concerned about the health of our banking industry, considering the credit deterioration caused by the pandemic, with small and medium-sized enterprises having great difficulties. Perhaps some of even the larger corporations having financial difficulties. Governor, perhaps you can provide our viewers, our attendees, a general view of the health of our banking industry. How are the banks faring? What is the state of the loan portfolios? Are we seeing a lot of impairment in the loan portfolios? And what is the BSP doing to support the banks?
The Philippine banking industry is sound. It is adequately capitalized. Lito, we learned our lessons from the Asian financial crisis, and so for the last 2 decades, we've been adopting fiduciary requirements, and so that for example, the capital adequacy ratio of Philippine banks right now is around 16.3%. That's much higher than the BSP's requirement of 10%, and even the BIS requirement of 8%. So we are adequately capitalized. The non-performing loan as of October is 3.7. That's fairly manageable compared to where we were during the Asian financial crisis. And so, and we're optimistic that with Congress approving our reform measures, that's as the FIST that is creating asset management corporation to absorb bad loans. Should there be bad loans? We don't know yet. As you know, in the Asian financial crisis, the bad loans emerged 2-3 years thereafter, and the asset management corporations were organized much later. Now, even before the emergence of NPLs, there's already a law to be signed by the president. So we're ready because of our experience in the past, and as I said, the banks are adequately capitalized, and we have a very low or manageable NPLs.
Just to clarify, Governor, did you say that the FIST or the asset management, the law that will allow for asset management to take the bad assets of the banks, has that been passed in Congress and just waiting for the president's signature?
Yeah, it has been approved by the Senate and the House. It just requires the approval of the president, and we expect it to be approved soon.
Oh, excellent. Maybe just for the benefit of some of our attendees who may not be as familiar, Governor, can you just explain a little bit as to how what this new law will allow the banks to do?
Well, it will allow the banks to unload some of their what's called bad assets to this asset management corporation, so that they can start with a clean slate, and they can start lending some more to the industry. But as I said, our experience in the past, if you remember, is that the FIST was not so effective because it was organized much later. Now we are even before the NPLs of the bad loans have emerged. We have already this framework that which we can use to help banks should they need it. You know, this is a fallback position. Not even sure that there will be bad loans, as I said, because banks are well capitalized at the moment.
Yeah, with that statement, Governor, I suppose the market should not expect significant recapitalization from our banks in terms of right offerings, follow-on equity transactions from our banks. You don't, the BSP does not think that would be necessary.
Yeah, you know, even at this time, they have already provided the loan loss provisions, and we allow them to do that, so in preparation for any eventuality. But we are, of course, looking at the situation every so often, and so we continue to monitor what was happening in the banking sector. But we are confident that the banking sector is sound and well capitalized at the moment.
Thank you, Governor. Secretary Karl, if I may go back to you, with what has happened in 2020, and given the expectations that you have for 2021, 2022, particularly in 2020, we've seen sectors like construction, real estate, retail, really suffer very significantly. I understand construction is down 40%. I've talked to a lot of owners of QSRs, retailers. Business is down 40, 50%, etc. Is the government doing, can you perhaps elaborate a little bit on whatever stimulus plans you have already undertaken and will intend to undertake to support particularly the industries that have been badly affected by this pandemic? And I would include, things like hospitality, transport, etc.
Well, thank you for the question. Let me begin with the construction, in particular the infrastructure program. There are two numbers that we have to look at when trying to explain the performance of infrastructure or public construction. The first is relative to the program for this year, we are actually on track. But relative to last year's performance, now it's 2021, so relative to 2019 performance, we are down by quite a lot. The reason for that is in 2019, we had a reenacted budget for the first 5 months. And the infrastructure program only caught up in the last 2 quarters. In fact, even with the reenacted budget in 2019 for the first 5 months, we were able to fully catch up with our infrastructure program. And because of the big base effect in 2019, our infrastructure spending in 2020 in the third quarter and in the last few months of the year actually was down. But we are on track with the program. Now, in 2021, the budget has one of the biggest ever amount for infrastructure. It's 1.12 trillion peso. That's 5.4% of GDP. And that is one of the biggest driver actually of our recovery in 2021. And the estimated jobs that will be brought back to the economy is 1.7 million. Now, the money is not the only concern. As I mentioned, it's not the stimulus, it's also the confidence and our quarantine level. For instance, one of the biggest complaints of the construction sector is that because of the long quarantine, many of the skilled workers and even the unskilled workers have gone back to their provinces and could not come back to where the construction activities are being done because of our quarantine measures. And in fact, in the Philippines, each province would have different, because of their autonomy, restrictions and rules on the transfer or movement of people. And it was only in December when we actually returned the inter-provincial buses. So that is on the construction. Now, because of the long quarantine, we of course have seen significant impact on the hospitality, on tourism, and other sectors. And as I mentioned, the main driver of the recovery is really our safe opening of the economy. And we are, I think, on track with that. We need to continue to do so. Now, to support the firms that have been affected, what Bayanihan 2 does, which is our additional fiscal and financial support, is to provide the following for the affected industry. So we continue to provide emergency cash assistance to the low-income families affected by higher forms of quarantine. We continue to provide various forms of financial assistance to the firms so they can avail of significant bank loans, and we support that with interest rate subsidy and credit guarantee. And these are one of the two tools that we are using to help the banks reduce the perceived risk of lending to the affected firms. So these are some of the tools and options that are available to support the affected sector.
Secretary Carl, if I may just follow up, because you mentioned the infrastructure program of the government, the build, I suppose, and the budget that you're setting aside for this year, perhaps through next year. As we know, that's always been one of the core economic strategies of the Duterte administration, which you were implementing, very robustly until the pandemic came. I guess it's begging the question, though, because of the pandemic, you've had to provide fiscal resources for unexpected things like social amelioration, supporting the healthcare sector of the government, and providing a lot of support for unemployment, et cetera, et cetera. And as it is, as I understand, the fiscal deficit is already expected to be closer to 10% than its usual track of around 3%. Where will the government get the fiscal resources to support the infrastructure buildup that the government has been undertaking on its own, rather than pushing very hard on private public sector partnerships?
Well, first of all, we actually did the tax reform. 4 packages of the tax reform were passed before the pandemic, and actually that is one of I think the insurance or the foundation for which we can spend in 2020. If we did not do, for instance, the reforms we did, the tax reform, we would not have sufficient fiscal space, I think, for the pandemic. If we did not do rice tarification, the price of rice would be 10 peso per kilo more expensive. And during a pandemic where people have lost their income, that would be a big hit at them. If we did not do universal healthcare in the national ID, we would not have a way or a foundation to begin the social amelioration program. So that is the first. The second is when we did Bayanihan 1 and 2, what we did was actually to pool resources from a lot of the GOCCs and the money parked in various funds that are not being utilized well. So all of these contributed actually to a much higher revenue to GDP effort or ratio in 2020. And the third one, Lito, is we have to look into the budget where there could be better reallocation of the money for higher priority. So in the budget, yes, we have a big budget, but the allocation or the efficiency of the allocation we saw could be better. And that is why we were able to move money from low or slow performing programs and projects or less priority to those that are much more in need. So that is, I think, the basis for 2020. And this whole fiscal reforms that started in 2005 and continued by succeeding administrations, and this administration building on top of that by pursuing the tax reforms, and we even passed the CREATE during the pandemic, and we're just waiting for the BICAM to address some of the differences in the version, actually creates a good basis and confidence that the fiscal house is in a very good order and the foundation for funding all these programs are in place. Now, we also rely on the private sector for a lot of these infrastructure. So this is not only the government, but the private sector also contributing to this. But we are also mindful of all the contingent liabilities and fiscal risk. So we have to do this very carefully as well. Thank you.
Mm-hmm. Yeah, Secretary Karl, if I may just go towards the issue of the fiscal deficit with what you've said. What is our expectation for the deficit this year, and what deficit level is the government comfortable to have for next year, given all the fiscal spending that you have mentioned?
But the Development Budget and Coordination Committee is projecting a deficit for 2020 of around, if I'm not mistaken, 8%, 8 to 8.5%. And that level may more or less be the same in 2021 because we are still continuing our stimulus program. And we have, apart from increasing our budget, provided additional relief to the CREATE bill, which lowers the tax immediately to 20% for the small businesses. We also have the net operating loss carryover extended, and we also have the tax incentives in place, but we do it in a more performance-based targeted. So we are looking at more or less the same level, but the important thing here is how we are able to make the fiscal story coherent. We continue to do tax reform. We continue to look into the budget to see where we can find efficiency, and we will continue to see the fiscal responsibility. So that, I think, adds confidence to manageable higher levels of deficit and debt. And this will continue to, in the middle term, show a downward trajectory. And that is what I think is important. We continue to be conscious that we want to be in the median of our credit rating here to manage that number around.
I was just going to ask about that, Secretary Karl, because, of course, one of the big strengths of the Philippines now is the investment grade credit rating that we have achieved, having been able to bring down our public debt to GDP ratios and many other financial ratios referring to our credit worthiness. I'm glad that you mentioned that the government continues to be mindful of that. Are you calibrating your fiscal, the use of fiscal resources and our fiscal deficit to make sure that our public debt to GDP continues to be in a very healthy range, and what that might be. I understand that we are now touching almost 50% again, up from about less than 40% only a year ago.
Well, that is actually one of our top principles. Fiscal prudence is really something we cannot give up. And this is not because we just want to achieve some rating. It's because we know from history that fiscal prudence is very important in sustaining present and long-term growth. If one looks at the history of Philippines, coming from ups and downs in the fiscal and the external accounts, culminating into almost a fiscal crisis in 2003, 2004, then those lessons were not forgotten. That is why in all our policy and our calibration, fiscal prudence is very important, because the impact on lives, on livelihood, and the future of the country depends on that. But we also have other tools. We're not only limited to fiscal policy. We have monetary policy. We have the private sector. We have our infrastructure program. We also have our regulatory, the BSP's regulatory programs to manage the recovery of our economy. And most important, it's really the productive sectors of the economy are there, and they just need to be left free to function. If not, then we would not see the recovery as good as we want.
Yes. Well, it's very true. Monetary policy, Governor, is critical to our economic recovery. But, Governor, there continues to persistent reports that our local banks, despite all the measures of the BSP to provide a lot of liquidity into the system, continue to be quite cautious with regards to lending, particularly during the middle of this pandemic. We have a lot of reports about credit lines being suspended, interest rates being raised, despite the fact that the BSP is trying very hard to bring down interest rates. Governor, what's your view on how our local banks are behaving or conducting themselves to support economic recovery?
Yeah, I think I keep saying this, monetary policy works with a lag. What we do today does not affect the market tomorrow, right? It could be as long as 9 months or a year. But so the banks are actually assessing their situation at the moment. In fact, they're putting some loan loss provisions. But I think there are some lending going on. For example, let's look at that innovative policy that we adopted, where we encourage banks to lend to micro, small, and medium enterprises. Any additional lending to MSMEs are counted as part of their reserves, and that has actually increased the lending to the MSMEs. So and also we keep on reducing interest rates, so that it will be costly for banks to simply park their money with a BSP, right? They have to make their money productive. So it will come. I think it will come.
Yes, and I also saw a report.
Go ahead.
Sorry, no, Governor. Sorry, please continue. Sorry to interrupt.
Yeah, you mentioned about our fiscal picture. You're right that when this pandemic hit us, we were in a very strong fiscal position. Our debt to GDP ratio was, as you mentioned, less than 30%. And so maybe as a result of this pandemic, we'll keep on borrowing, but we're very careful when we borrow money. Most of our loans are from Japan, and most of the terms are very favorable. 30, 40 years to pay, and very low interest rates. So we're very careful, and also recognizing that because of the pandemic, there's a need for bridge financing. The central bank has actually entered into a repo arrangement with the national government. We lent them something like we lent them exactly 540 billion pesos. Okay, because we know that as a result of the crisis, revenues will be down, and they need a lot of money for the social amelioration fund. So we lent them money, 540 billion pesos. This is unprecedented, as you mentioned earlier. And so these are central bank helping national governments. And Karl also mentioned there's an increase in dividend. You know, the BSP declared, if I remember right, 40.5 billion dividend to the national government. although Lito, although the new law says we're not supposed to, we can afford not to declare dividend, but out of the goodness of our heart, we help the national government with 40.5 billion.
Governor, I wish the BSP was as generous when I was Secretary of Finance back in the days. But
okay.
I'm happy that the BSP is supporting the national government with dividends. I was going to ask Governor because I also read recently that the BSP is now even allowing, I think, foreign banks domiciled in the Philippines certain exclusions on their single borrowers limit that would allow them to lend even more. Particularly for our large conglomerates who need financing on their infrastructure projects. Is the BSP doing other things to allow for relaxation of the single borrowers limit? Because I understand that that's a big constraint, particularly for the conglomerates.
Well, on this SBL, as you know, the SBL restricts lending up to 25%. We have earlier relaxed it to 30%. To allow banks to lend to conglomerates, and that with respect to the foreign banks, as you know, I think 6 years ago, and a new law was passed which changed the capital composition of foreign bank branches, and so the central bank allowed them, I think, 5 years as a transition period, which expired last December 31, 2019. And because of the pandemic, we extended that to 31 December 2020. Now, because we want them to continue lending, we extended regulatory relief for this foreign bank branches. So this is an accommodation, also consistent with the current situation.
Yes, maybe Governor, related to this, and I don't want to put you on the spot, but I see Deputy Fonasher is also with us. But there were also some talks about the single borrowers limit being applied at the group level or conglomerate level, not at these individual legal entities, particularly operating subsidiaries of our biggest conglomerates. Is that something we should still expect? Because that might limit the ability of conglomerates to borrow, or the ability of our banks to lend to the different conglomerates if they were to be aggregated.
I'll call on DG Chuchi to answer that, all right? DG Fonasher, can you answer that?
Yeah. It's currently being studied, so we're gathering data and information to also, as you know, regulations should really be also evidence-based, and so we're still in the process of studying that matter. So that might be also another area that can benefit.
Okay, thank you very much, Deputy Governor Chuchi. Governor, staying with you, I hope that Secretary Chua is correct in terms of when the recovery will start taking place in the Philippines and seeing a pre-pandemic condition in our country. Governor, if that were to take place with all the liquidity that you have pumped into the economy, of course, the concern might then become a concern for inflation. No? Is that something that the BSP is actively discussing? How would we address inflationary pressures if the economy indeed recovered as expected, and with all the money that's in the system, with all the quantitative easing that you've done, the reduction of reserve requirements, et cetera, what was the BSP's game plan to win out liquidity out of the system?
I've been quoted as saying that inflation is the least of our worry at this time. In fact, we have projected our inflation target up to 2024, which is 3% plus or minus 1%. And so we're pretty comfortable with our inflation target. And as you know, the monetary policy is evidence-based. So we are preparing for an appropriate disengagement strategy or exit strategy. But my assessment is that the low inflation will be there for long, maybe a few more quarters, and that in any event we will continue to monitor the situation. And I think this crisis is not a sprint; it is a marathon. So let's see.
That's good. Thank you very much, Governor. Secretary Chua, if I may turn back to you. You mentioned a few legislation that the government has successfully shepherded through Congress, particularly the tax reforms that you have done. When you think about our economic recovery plan, are there other critical legislation that Congress needs to pay attention to that the government is pushing for? And what are your own expectations with regards to this legislation? Perhaps I can start with CREATE because I know, and you've mentioned it, no? Because it's been passed in the Senate, it's been passed in Congress, but the BICAM has not yet. I think there was some expectation that would have happened before the year end. It hasn't. And there may be a lot of discussion going on again in the lower house and in the Senate as to what the final version will be. What's your own expectations on the CREATE, which is the one that will reduce corporate income tax rates? And then what are the other key legislation that the government is pushing for, and what are your expectations on this legislation?
Well, thank you for the question. On the CREATE actually addresses two very important issues in corporate taxation that have not been addressed for 2 decades. The first one is our very high nominal corporate income tax rate, which is the highest in the region, and the average in the region is towards 20. And the CREATE actually brings it down to 20% for the small firms and 25% for the other firms. So this is a very important element of our recovery program. And it also includes other incentives that will make our tax incentive system more performance-based and targeted. That addresses the second problem, wherein we grant incentives that have no limit, meaning they can be enjoyed forever, the 5% gross income earned, and you don't have to be accountable for results. And that is the whole idea of this reform. We want to give incentives for the right type of investment, but the results have to be measured. Otherwise, these are all tax expenditures with significant fiscal costs, and there's no economic benefit. So I think that is important. And after the CREATE, there are 2 more packages in the tax reform program, the property valuation and also the passive income and financial intermediary taxes. On the property valuation, it's not about increasing the rates, it's about making the valuation more harmonized, because currently we have different ways to value property. The local level have different ways of valuing it, the Bureau of Internal Revenue, the private sector, and so on. And this creates a lot of difficulties, especially when we have to cost out right of way for infrastructure. And the second one on the passive income and financial intermediary taxes, we have more than 80 rates for passive income, for financial taxes, and documentary stamp taxes. And the idea here is to further simplify and find a level that is that will improve economic efficiency, deepen the capital markets, and create incentives for better use of that resources. So apart from that, there are 2 sets of reforms that I think are crucial. The first set is the one that is handled by NEDA. These are the continuing liberalization of the economy by opening up more sectors to foreign players so that we can attract the capital, innovation, skills, and managerial talents. These include amendments to the Public Service Act, the Foreign Investment Act, and the Retail Trade Liberalization Act. So these are all important and part of this whole idea of making the economy more competitive and attractive to investors. Now, I think the second set of reform is what Governor Ben had talked about. These are remaining reforms in the AMLA and the Agri-Agro law. We'll pass on to Governor Ben if you want to discuss them. Governor, thank you.
Yes, as you know, Lito, the Agri-Agro law has been a major constraint for banks. So there's now legislation which will expand the use of agri-agra law so that there will be less burden on the part of the banks and easier to comply. And so we are working with both houses of Congress. And of course, there's another measure which is on the AMLA amendments of some restrictions on the anti-money laundering. So this is to avoid the Philippines from being in the gray list, which is very important. So those are some of the measures that we are pushing. And I think there's a pretty good chance that they will be approved by this Congress.
Thank you. A common topic, and because it's such a significant engine to our domestic consumption, our OFWs, and with this pandemic, we've seen a fair bit of repatriation of OFWs. I don't know, maybe Governor E.Diokno or Secretary Karl, can you provide us just additional insights as to the government's expectations on the role of OFWs? Will we continue to see repatriation, and would that reduce the level of remittances and therefore, the less support for domestic consumption, or do you see a resumption of our deployment of OFWs?
First of all, during the pandemic, the initial forecast is that OFW remittances will decline by 20%. That didn't happen. Our latest number says that it will probably be shrink by maybe between 1% to 2% this year. And we expect it to increase by 4% next year. And in fact, I'm a little bit more optimistic here on the overseas Filipino remittances. I think if we just change the nature of our workers abroad, more nurses, more doctors, more computer specialists, I think we can continue to benefit from remittances and at a higher level in the future.
Yes. Thank you, Governor. Thank you, Secretary Karl. Unfortunately, we only have about 5 minutes left, and I'd like to maybe provide our two gentlemen, a little bit of time to provide us a framework for, what to expect in the future. Governor, maybe if I may ask you to focus, I know that the BSP has started giving out licenses for digital banks. Maybe you can just provide us a view of the future in terms of banking in the Philippines. What would be the role of digitalization in our banking industry? Do you expect even non-banks, like technology companies, being allowed to enter into financial services, of course regulated by the BSP?
Yes, thank you, Lito, for that. Even before the pandemic, I have said that my plan is to make the Philippines a cash-light rather from a cash-heavy society. In other words, we are strongly advocating for digitalization. In fact, our target is by 2023, at least 50% of all transactions shall be in digital form, and that by 2023, at least 70% should have a transaction account, 70%. And the pandemic has actually accelerated that goal. And so we're happy with this, and we continue to move in that direction. We have most recently, as you mentioned, approved a separate framework for digital banks. We are now in the process of receiving applications, and we are looking at the applications, and probably we'll start with 5 new digital banks first, and then let's see how it will develop as we go along.
Governor, how equipped is the BSP in terms of regulating and supervising digital banks? Have you provided a lot of technology training for your examiners and so on? I guess we need some assurance that they will continue to be well regulated and well supervised.
Definitely, we have a program of course, in the past we have already some training for our people, and we continue to develop skills at our level so that we can handle this issue of digital banking moving forward.
Thank you. Secretary Karl, I'll give you the last word on this session. Looking forward into 2021, 2022, what do you think are the key challenges? In other words, if the market is looking at the Philippine economy, what would be the goalposts that they should be watching that will determine whether your expectations of a strong recovery will or will not happen. What should we be watching out for?
Well, maybe I can summarize into three areas. No, the first is I think consistency of our reform program, and that is I think the bedrock of this administration. We recognize that previous administrations have contributed a lot to our present state, and we will continue to build on that, and we will not waver on this very important reform program. And as you have seen, whether before or during the pandemic, we continue to deliver. And I think this is very important, the consistency of our policy and reform program. The second is, we recognize that the economy is strong enough to recover if we enable it to do so. The issue last year was that we prevented it from doing so because we were very risk averse. So that is why beginning the fourth quarter, we have changed our policy from avoiding the risk to just managing them. And so far, we have seen the results. The economy is more open, yet our COVID cases have not spiked as other countries have seen. And I think finally, of course, like everywhere in the world, our vaccine program needs to be fully on track. And that, I think, is a very important element of our recovery. I think with that, we can surely see positive growth in 2021 and an even better recovery in 2022. And yes, we are derailed by 2 years, more or less, delayed rather by 2 years, more or less, from our economic programs. But we have actually advanced a lot of our targets. Poverty, for instance, we committed to reducing poverty by 6 million by 2022. We achieved that in 2018, or 4 years ahead of schedule. And all these important starting points are proving to be very useful as we manage and maneuver around this crisis. Thank you.
Thank you. Well, on that positive note, ladies and gentlemen, I just want to, first of all, thank our very distinguished speakers, Governor Benjamin E.Diokno, Governor of the Bangko Sentral ng Pilipinas, Secretary Karl Chua, Secretary for NEDA, or the National Economic Development Authority, the main economic planning agency of government. I would also like to thank, of course, our two deputy governors from the BSP, Francisco Daquila and Chuchi Fonasher. Thank you very much for joining us this morning. Ladies and gentlemen, I would also like to thank you on behalf of Credit Suisse and the ASEAN Stock Exchanges for joining us this morning. I hope you've had an opportunity to get very, very insiders' views, insights into what has happened to the Philippine economy this past year, which has been a very difficult year for the Philippine economy, but importantly, what we can expect going forward in terms of the Philippine economy, where the recoveries will come, why they will come, what are the key components of the economic recovery of the Philippine economy. On that, thank you very much and good morning, and I wish you a very happy, a very joyful, and COVID-free 2021. Thank you.